everyone. Thank you for being here. Today, we are going to demystify the core infrastructure of the financial world. Your presentations title the basic mechanism from need to financing in the financial markets. We'll break down exactly how capital flow from those who need it to those who invest it. We'll cover four essential building blocks. First, the primary market where new securities are born. Second, the secondary market where investors trade existing assets. Third, the core dynamic of supply and demand within the order books. And finally, how real price formation actually happen on a millisecond basis. By the end of this session, you will clearly understand how the primary market creates securities to fund economy and how the secondary market provides the vital liquidity to keep it moving. Let's get started with our first block, the primary markets. From a financing need to capital, a company or a government raise a fund, the investor trade those claims among themselves. Financing needs, the company or the state capital. The primary market is the issue short or bonds, the news. The investor subscribed capital flow to the issuer, and secondary market is secure or resolve the use. The primary market creates securities, the second market keeps the liquidity. Both are essential to functioning financial circuits. Primary markets, the new segment of the market. Capital flow directly from investor to the issuer, where securities are created for the first times. IPO, the initial public offering. A private company sells shares to the public for the first time, listing on exchange and raising equity capital. The bond issuance. A company or a government borrow directly from investor by using debt security that pay interest over a fixed terms. KID. The issuer receives the money. The transaction moves capital from investor pocket into the company's or government's balance sheets. Secondary markets. Second-hand segment. Investor trade existing securities among themselves. This is investor A. Sell share already owned. Stock exchange match order. Now new capital created. Investor B. Buy a share from investor A. The liquidity. Investor can enter or exit a position at any time without waiting for the issuer. No new capital for issuer. The issuing company does not receive money from secondary trades, only the seller do. The law of supply and demand. Buy and sell orders are confronted in the order books. Look these order books. Buying and ask to sell. The best bid is 49.98. The best ask is 50.01. Spread over 0.03. If the demand bids, buyer posts the higher price they are willing to pay. The supply ask, seller posts the lower price they are willing to accept. The matching. When a bid price meets an ask price, a trade executes automatically. More buyer than seller at a given price. Price tends to rise. More seller than buyer. Price tends to fall. Price formation. How an asset real-time price is actually set on the markets. Each executed trade prints a new price. The last traded price is the code you see on the screen. The order book confrontation. The exchange matching engine continuously compare bids and ask. The marginal trade sets the price. The price on the very large market trade becomes the current market price. The new information move it. New earning or macro data shift buyer and seller price expectation. Continuous auction. On liquid markets, this repeat thousands of times per second. To wrap up your session today, let's quick revisit the takeaway from this four mechanisms. First, we saw that the primary market is the launch pad. It creates a new securities and inject fresh capital directly into a company or a government. Second, the secondary market acts as a marketplace, providing essential liquidity by allowing investors to trade seamless among themselves without affecting the issuer. Third, we explore how prices are not random, but emerge from the continuous confrontation of supply ask and demand bids. And lastly, we learn that every single match trade in the order book instantly prints the next real market price. Understanding this fundamental concept is crucial whether you are analyzing a company IPO or watching stock price tick up and down on your screen. Thank you all for your times and attention. I would now like to open the floor for any question you might have. Don't hesitate to write in the comment. See you soon. Have a good afternoon or a good night or a good evening for everyone.